Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Chinese economy, and specifically to talk about the rural banking sector. And before you start thinking, the rural banking sector, surely nobody cares about the impact of that. The rural banking sector is actually huge. There are 3,700 different banks in rural China. And just to put that into context, in terms of comparing it to the USA, there are a total of 4,600 banks in the USA. In the UK, there are 328. So we're talking about 11 times the size in terms of the total number of banks. And in terms of Australia, there's around about 97 banks. So that's around 38 times larger than the whole of the Australian market. And in terms of the assets that these rural banks have, it's currently sitting at $8 trillion. So that's double the total size of the Australian market and around about 1/3 of the total US banking market. So we are talking a serious amount of money here. And the rural banking sector in China is in severe difficulty right now. And in 2024, 290 of those banks were bailed out. So they were basically merged with other rural banks. And concerns are now rising that this is creating larger and larger rural banks that are on the verge of going bust. And this is all adding to the problems in terms of the local government debts, because these rural banks are financed in many cases by the local governments. They set them up to provide loans to all of the local businesses. So we are looking at a very circular situation here. And in terms of where these banks get their funding from, they take it from the interbank market. Now, before we go on any further today, I want to talk to you about today's sponsor, NordVPN, who are offering Joe Blogs viewers an exclusive deal that you can access by clicking in the link below. Now, if you follow the channel, you'll know that I personally have been a victim of cybercrime. This channel was taken over by crypto criminals, and the way that that happened was I was sent a link which I clicked into, and that link contained malware, and that meant that the hackers had access to my computer and basically changed all of my passwords and personal details. And if I'd have been using NordVPN at that point, it would never have happened, because NordVPN contains a unique feature called Threat Protection Pro, which would have prevented me from being hit by that malware attack. So NordVPN is fantastic for protecting you every single time you go online and making sure all of your data remains secure. But it also opens up a world of opportunity for you, because it enables you to access data and information and TV shows and movies and sports matches in regions that you may be geo-blocked from. You can change your location and access all of that entertainment. So as I mentioned, NordVPN is offering a special deal for Joe Blogs viewers, 4 months extra on a 2-year plan, which you can access by clicking in the link below or going to nordvpn.com/Joe Blogs. And the great news is that it offers a 30-day money-back guarantee. Now, when we're talking about a financial institution using the interbank market to fund its balance sheet, what that means is that that bank doesn't have its own cash. It's not sitting with a huge amount of money that it can lend out to customers and charge interest on. So what it does instead is borrows from other financial institutions who have spare capital. And obviously there's a cost involved in taking that money. And this chart shows the interbank borrowing cost in China dating back to October 2006. And the scale on the right-hand side of this chart shows the interest that the financial institution has to pay to borrow this money, and goes from 0% at the bottom to 7% at the top. And what this chart shows is that over the past 19 years, the interbank borrowing cost has moved around quite a lot in China. In October 2006, the cost of borrowing in the interbank market was sitting at 2.6%. However, as a result of the global financial crisis that struck in 2009, interbank borrowing costs rose to an all-time high of 6.4% by June 2011. And over the past 14 years, we've seen a reduction in that interbank borrowing rate, and the current rate in China is 1.7%. And as we've just discussed, the rural bank in China that's using the interbank market to fund its balance sheet will be borrowing at these costs and then adding a profit margin on top of this to charge its customers. So back in 2006, when the borrowing cost was 2.6%, the bank may have added an additional 2% on top of that and charged its customers 4.6% interest. However, as the borrowing cost today is down to 1.7%, if the bank is adding a 2% margin, it will only be charging its customers 3.7%. So that's obviously beneficial to the customers because they're paying lower interest, but the bank is still making its 2% profit margin. So this system works really well if everything goes to plan. If all of your customers continue to pay you their interest and make their repayments, then everything works fine. However, the problem comes when one of those customers or multiple customers start to struggle in terms of being able to give you the money for the interest or even be able to make their repayments. And as you'll know if you've been following the channel, over the last 3 or 4 years, the Chinese economy has been in real difficulty, and a lot of the companies that took on huge amounts of debt simply haven't been able to make those repayments. And that causes you a problem when you've been borrowing money in the interbank market because you have to pay back that interest to the other financial institutions that have provided you with those loans. And if you're not receiving in any money from all of your customers, then you as a financial institution are facing the risk of going bust. And that's what's happening in the Chinese rural banking sector right now. You probably won't be surprised to hear that a large chunk of the $8 trillion of cash that's been lent out by all of these rural banks has been provided for property finance, property development companies, and loans to individuals who wanted to buy property. And if you've been following the channel, you'll know that the property sector is in the toilet in China right now because the Chinese authorities decided that the property developers were taking on too much debt. They decided to pull the rug on all of that financing. And so the property development businesses themselves have been going bust. But this has caused the whole of the property market to implode. We have seen falling prices for almost 3 years. We've got falling sales. And therefore, a lot of individuals who borrowed mortgages to buy property are now sitting underwater. And in fact, you'll also be aware if you follow the channel, a lot of people have taken on debt for properties that don't even exist. They paid over the full amount of that purchase price to the property developers, and the developers haven't even built those properties. So what we've got here is a huge bad debt situation that's now building up in these rural regions. And the 290 banks that have found themselves in such dire straits that they've had to be bailed out have now merged with other larger rural banks. And all that's doing is robbing Peter to pay Paul. You're moving one set of bad debts from a small bank into a bigger bank. So as a percentage, it reduces the overall percentage of bad loans. However, it doesn't solve the problem. Those loans haven't been repaid. The customers haven't suddenly come into a lot of money and been able to give the bank the money back. And in order to provide a bit more colour for this picture, let's have a look at a real life example of what's been going on. In September 2023, the government in northeast China's Liaoning set up Liaoning Rural Bank with 20.8 billion yuan in registered capital, which is the equivalent of around 2.8 billion US dollars. The newly created bank then absorbed 36 small local rural lenders, many of which had soaring bad debts, including Liaoning Denta Rural Commercial Bank, which reported a bad loan ratio at the end of 2021, so 2.5 years earlier, of 21.54%, compared with the sector average in China of 1.73%. So let's talk about how bad debts work for banks and how it impacts on their profitability. If we take the example that we talked about earlier of a bank borrowing in the interbank market at 1.7%, then adding a margin of 2% on top of that, its profit margin, and charging its customers 3.7%. That all seems fine. You're going to make your guaranteed 2% profit. Everyone's a winner. The problem that you have is if one of those companies doesn't pay you back, it's going to reduce your profits. So if we assume that that bank borrows $100 million in the interbank market and then lends it out to all of its customers, its 2% profit margin will provide it with 2 million of profit. You've lent 100 million, you're making 2%, so that's 2 million. Very good. If 1% of those customers fails to pay you back, so it becomes a bad debt and you have to write it off, that 1% out of your 100 million equates to £1 million. So of your £2 million profit, you've just lost 1 million. So you're now only making 1% profit because you had one customer that didn't pay you back £1 million. If you have two customers that don't pay you back, so 2% of your loan book goes bad, then basically in this example, that would equate to £2 million, and therefore all of your profit is wiped out. So you can't afford more than 2% of your loans going bad. In the example we just looked at of those banks merging, one of the banks had a bad loan ratio of more than 20%, and that was back in 2021, not now. It's likely that that situation has got worse because the Chinese economy and the Chinese property sector has got significantly worse since 2021. So in this example, if you had bad debts of 20% out of the 100 million that you'd lent, you would lose 20 million of it. So you're down 20 million. You're only making 2 million a year profit. So that 20 million would equate to 10 years profit wiped out because of those bad loans. And as I've just said, if the bad debt ratio got above 20%, let's say it got to 30 or 40 or 50%, that's going to wipe out probably the whole history of your profits. And also what it means is, as a financial institution, you're now underwater because you're having to pay back the 1.7% to all of the financial institutions that you borrowed the 100 million from. So you've got an obligation of 1.7 million to pay back against all of that borrowing. So if you don't have it, if you're not actually being paid enough by all of your borrowers to actually make those repayments, then you as a financial institution are now illiquid, bankrupt, underwater, needing a bailout. And that's what's happening in China right now. A lot of these rural banks borrowed money in the interbank markets, which they thought was a no-brainer. Borrow it cheaply, lend it on, make some profit, everyone's a winner. But the problem that you have is if a lot of your customers start going bust, which is what's happening for a lot of these financial institutions in rural China, then you're doomed because there's no way back from that. You're never going to be able to recover those losses. And what we're seeing here is that the rural communities where the property market has been badly affected, because if you're building a property development in the middle of Shanghai, you've probably got a chance of selling that because there's always demand in the large cities. If you're building something in the middle of nowhere in China and there's no jobs there and the whole economy is going in the toilet, then there's really no other option. You're not going to be able to turn that around. Even if you cut the price of those apartments, they're not going to sell. I'm sure you've seen the video footage of ghost towns across China where they built all of these developments in the middle of nowhere. Nobody wants to move into them. Nobody actually is living there. And so this is worthless as real estate. And so these rural banks are really struggling now because they've borrowed all this money. They've lent all the money to all of these people. The money's now gone. They're never going to get it back. They're not being repaid the interest. And so they themselves are now going bankrupt. And that's why the rural banking sector is now needing to be bailed out. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening in rural China is really quite fascinating and also very concerning in terms of the Chinese economy. We've been focusing in mainly on the big cities and what's going on in the large conurbations. But of course, there is a lot of rural China out there. It's a very large country and it's got about 1.4 billion people living all across it. And as the property boom went all across China, lots of these rural areas suddenly received huge investment. The property development companies turned up and were literally building whole cities from scratch. And they were selling them off-plan to lots of people who thought that this was a no-brainer. You buy property, it goes up in value, you make a profit, everyone's a winner. But of course, that all stopped a few years ago. The property sector collapsed. A lot of the property development companies have gone bankrupt. Evergrande was probably the most famous. That was something I made a lot of videos about if you've watched any of those in the past. But what we're seeing now is these rural communities are really struggling because at times when an economy slows down, everybody focuses in on the most popular areas, the biggest cities. That's where all of the work is, all of the businesses, and that's where you're going to potentially make some money in the longer term. But in the rural areas, that is never going to happen. This was potentially a once-in-a-lifetime opportunity for a lot of these areas to bring themselves up. And as the economy has now nosedived, these property developments have been abandoned. And what we've got here are lots of companies and people who've borrowed money in anticipation of this being the next big thing. And of course, it's not going to come back. They're not going to be able to recover any of that capital. So we are looking at huge bad debts all across China here. And what we're starting to see now is that the rural banking community is starting to collapse because these borrowers, these financial institutions have borrowed huge amounts of money from the capital markets, and they can't repay it because they're not receiving in the income that they were expecting from their customers, and so they don't have the cash to be able to give the money back. And so the only option that the Chinese authorities have is to start merging these banks. This is similar to what happened in 2009, 2010 and 2011 in a lot of economies around the world after the global financial crisis. We saw financial institutions becoming bankrupt and they had to be bailed out by the governments. And just to put into context how large this situation is, we're talking about 7.8% of the rural banks that have now been merged into bigger banks. And 7.8% of the $8 trillion of loans that are out there at the moment in rural banking equates to $624 billion. Now, if we compare that to the bailout of the banking sector in the UK following the global financial crisis, the UK government provided funding of £137 billion, which is roughly $180 billion. So we're talking 3 or 4 times the amount that the UK government bailed all of those financial institutions out with already has gone into the Chinese rural banking sector. And this is just the start of the problems. It's likely that over the next few years, we will see more and more of this. And all the banking sector is doing at the moment is consolidating the problem. It's just taking small banks and merging them with larger banks. It doesn't solve it. All it does is kick the can down the road. At some point, somebody's going to have to write off all of those loans to say, we're never going to get the money back. This financial institution is actually insolvent. It's bankrupt in itself. But of course, the Chinese authorities are unlikely to do that because at the same time as we've got this 8 trillion black hole that's appearing in rural banking, we've also got a $9 trillion black hole in terms of the local government financing vehicles. And if you haven't seen my video on that, check it out because there is another major problem because China basically said that the local governments couldn't borrow directly. So all the local governments did was set up financing vehicles and then borrowed through those. And they've been using that to fund things like property developers growing the local economy. So we've got a very circular situation here. And when you add those two numbers together, it's $17 trillion of debt that potentially could all go bankrupt. And of course, the Chinese authorities wouldn't let that happen. But what we've got is a huge amount of debt that isn't showing on the official borrowing figures for China. Because I'm quite often hit with comments from people saying, you're always talking about the debt in China, but what about the USA? They've got hundreds of trillions of dollars of debt. But what we're talking about here is hidden debt. This debt isn't being disclosed by the Chinese authorities. So we're not comparing like for like when we're looking at how much debt the US has versus China. China actually has a lot more debt. It just isn't disclosing it. So the overall summary of today's video is that what's happening in the rural banking sector in China is very concerning. We are starting to see small banks going bust. They're being merged with larger banks, but all that is doing is delaying the inevitable because at some point these banks are going to have to admit that they're never going to be repaid. They're going to have to write off those loans, and this could wipe out years of profits, potentially decades of profits for these financial institutions. And there's a real risk that all of them could be facing insolvency. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.